Welcome to the Sykes & Company PA video blog.
With retail pharmacies for the calendar year 2018 and 19, the Act is allowing, under certain cases, the accounting for tax purposes to go from accrual to cash. Now, prior to the Tax Cut and Jobs Act, most pharmacies, with some exceptions, had to report on an accrual basis. The majority requirement here is that if they have gross sales of $25 million or less, average for the last 3 years, so if it's for 18, it'd be 17, 16, and 15. If those gross sales for either a store you have or collection of stores that you own in a control group, and a control group is simply a series of stores that maybe you and several other people own, in particular, maybe the same fashion, and it gets much more detail than that. But a control group is what you might think similar ownership. Again, if you got 3 stores, the collective sales are under 25 million average for 17, 16, and 15, then for 18 you're allowed to change to the cash basis. Now, essentially, when you change to cash basis, there are a lot of things that come into effect there. The main item of which is the receivables that you have been reporting as income, especially the third-party receivables, are reversed out, and any other receivables that you have, whether it be counter charges or in-store charges, obviously those would be reversed out in that process. And obviously any payables that you have applying to typical normal expenditures that you have would also be netted back against that receivable reversal. Now, I will tell you, as far as inventory is concerned, there's several schools of thought here, because the proposed regulations that came out in August of 18 are not perfectly clear on some of these items, yet there's some people taking some very aggressive approaches and not including inventory as far as the on a cash basis of accounting. Our firm's posture is to be a little bit more conservative with respect to that, and we will be including the inventories without getting into the details here, and any payables that apply to inventory that's still on the shelf. But even in that scenario, anytime you take receivables sometimes or $400,000, $500,000, $600,000 in an independent store, sometimes less, sometimes more, and you pull that out as a deduction, and even though you're adding back a few payables, you can very easily have $1 to $500,000, if not more, of adjustment on a one-time basis in the tax year of 2018. Now, that adjustment is called a Section 481A adjustment, and that adjustment, when it's a negative number, can come out against profitability all at one time for 2018. You have to file an IRS Form 3115. There are specific instructions about how to do that are in. They came out with the proposed regulations in August of this past year. But essentially, with the pharmacies that we're doing the preliminary planning on for 2018, we're seeing tremendous adjustments that are occurring with respect to losses in most of these particular years. Now, it's important that if your entity is a pass-through S corporation, for example, that in order to be able to take these losses, you have what's called basis, BASIS, in order to be able to take these losses for 2018. So you need to be talking to your tax preparers, your CPAs, et cetera, about making sure that you've optimized your tax basis so that you can utilize these losses. But when all said and done, you have to obviously report on a cash basis going forward. So this changes the accounting for income tax purposes only on a cash basis moving forward, tax years 19, 20, etc. We at our firm will continue to report on an internal basis accrual numbers, because we believe that accrual numbers only tell the only story that you can tell with respect to what the profitability is or is not. Cash basis accounting does not give you a good indication of what's taking place really with the pharmacy. It's just an income tax methodology that can be used, but you can have large swings of income both up and down that you can control very easily on an income tax basis. But again, this is a sleeper issue. I'm not seeing it talked about very much in the profession. I am seeing the Section 199A qualified business income situation talked about much more often, but that's a much smaller issue in comparison with the change in accounting from accrual to cash for 2018, should you desire to do this. Again, it's optional, not a requirement. But this is a big issue for most of our retail pharmacies for this year. Well, they clearly need to understand where they are, have the fundamental accounting in place so that you can make these determinations appropriately. You obviously don't make these elections until post year end, so you can wait into 2019 to make those ultimate decisions. But if you're doing your planning and appropriately trying to plan your cash outflow for tax purposes, then clearly you need to be taking a look at it now as we're in the final stages of the fourth quarter of 2018. But it will impact obviously 18. You may also decide in looking at this that you want to wait until 19 to do this. So there's cases where you might be wanting to delay this, or if you're getting ready to sell your pharmacy, you might not want to consider it all for a certain number of cases. And again, there's some very complicated issues involving this particular law, the interpretation of this, and again, the inventory is a very different animal here that has to be looked at very carefully. But this is a big issue for 2018 for retail pharmacies.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.